This quote below in pink, risk not being defined by cash, but by mental execution, is going to be a key mentality to have for myself. But just because you're risking 200 to make 200 doesn't mean that is proper risk management. The risk management is followed by the mental execution. There needs to be a reason for everything that you put on the chart, your take profit, your stop loss, your break even. The moment your mental execution is involved with emotion is when you start making bad decisions. I've been trading the markets for about 5.5 years, a little over that now. I've taken several payouts. I'm not entirely profitable yet, but I'm definitely above average of where most people are. Struggled with a lot of things in the beginning, but I'm understanding it now. Every strategy does work, all that stuff, but it just mainly comes down to the execution of the person. You could backtest data and have a 90% win rate, but if your mental is skewed in real-time markets, you are not going to make money. And that's just the reality of it. You see that I'm looking to speed run either a 25K or 50K. There's a difference between blowing an account and over leveraging an account. Very big difference. I'm gonna spam evals. That literally just means I'm gonna have a funded more times than not, get a payout, buy evals, rinse and repeat. So once we get funded, I already am funded. So we're looking to build into a payout. That's like step number 2 of the whole process. So once we get a payout, it's a lot easier to rinse and repeat evals. The example I have, risk 300 to make 600 while trailing aggressively is true, but I'm risking 250 to make 250 plus per trade. I'm not risking 500 to make 500. You'll see in my screenshot, I was doing that initially, but it's literally practically impossible to lose a funded if you have above a 65, 70% win rate and risk 1 to 1 with the occasional push to 1.5, 1 to 2, 1 to 3. I usually just take base hits more often than not. Create a $1,500 to $2,000 bankroll on one account, click the payout, so about 300 to 400. That means our bankroll doubles, so it's really hard to go to zero once we build that buffer. Trade evals aggressively. That is going to change with the next slide, and I'll explain why. If you're given $400 on all evals, that means you're given 5 chances on evals to get a funded. And then you lower risk entirely on the funded. This is very important because if you are spending $90 eval, right, and that takes you 4 chances to not get a funded, that's pretty unlikely that's going to happen as long as you're trading properly and you're trading, you're taking A plus, A minus setups. The risk that you are doing after the fact is entirely up to you, and before the fact is entirely up to you. So low risk, trade evals up until you're funded, which I've been doing. That way you never lose the 400. Once you build a buffer, it'll take longer to build fundeds and longer to build multiple fundeds. I'm going to be in between these two, so always have an eval and a funded open at the same time. Once you build the buffer, you definitely want to buy eval because if you're up 15 to 2K on a funded and you want to take that payout, you should immediately have an eval and have both on at the same time. And choosing A plus, B plus setups on the funded and taking C plus, B minus setups on the eval and being more aggressive. I am somewhere in between these two, more so within the medium risk. Once I build the buffer, I understand on the charts it looks as if you're risking 300 to make 300, but you're not. Eval, you are risking 70 to make a funded. You're not making any money. In real time, I understand it's risk dependent and risk is relevant in correlation to your trade. But once you pass that eval, you're risking $100 to make an infinite amount of money. Most people really don't realize that. Let's say you're in a trade, you're risking 300 to make 600. You are over the longevity of that account when you have it, you are risking that amount to get a funded. After you get the funded, the risk reward is infinite. How do prop firms make money? Full porting degenerates, instant fundeds and activation fees. A lot of people get hesitant once they get into funded. Don't buy evals unless the activation fee is included. That pay for it outright, especially if you're confident and you're, above average of a trader. These are the pain points and the solutions to the pain points. The loss streaks has high size losses. You need to look at your win rate in terms of a monthly to yearly basis. So if that means out of 12 months of the year, you are going to have 7 to 7.5 winning months, probably maybe even more. I don't know the math entirely. Maybe 8.5 winning months. The rest are either going to be break even or losses. If you're having a down month and you're break even or just red, that is the reality of that's going to happen. And to help your mental out even more is the lower size. If you're making 250 to 300 per trade and you end out on the week 400 plus, and you copy trade that across 5 or 4 accounts, that's like 10K months, 2K a week. So stuff like that. Really pick and choose your setups, especially if the market isn't giving you what you want it to. It's just real basic stuff: psychological error, weekly backtesting journals, hesitation. That's just formula-based trading and screen time. Everybody runs into hesitation, especially if the setup isn't A plus. It's gonna happen. Real basic smart money concept, ICT concept. I think it's really simple, really black and white. It's a clear draw on liquidity, like a high a day, low a day, and another external gap. You take it to there, that gives you that 1 to 1.5, 1 to 2. If there's no clear draw and we're in the middle of nowhere and you're just looking to scalp it, you take the 1 to 1. If there's a clear draw, look to push it, look to see it through. Obviously, trail aggressively on a funded, so you guarantee that money. But if you're confident in the trade, that's entirely up to you. I'm a little bit more aggressive with my trail. I'm looking to get my base hit because I'm more of a scalper. June hasn't been that great. Or whenever this goes up, actually, I probably will be live the next day. Again, I'm not looking for this video to gain traction. I'm literally just making it for myself. I think a lot of people in the trading scene are doing stuff like this. People get funded and they copy trade them and they make money and they do that for a living and they just post their, 10K, 15K days. Sure. I know I know what's gonna happen. I know I will go from this 50K to 100K to 150 to 200K. Like, I know it's going to happen no matter how long it takes me. It's just going to be a matter of time. And I think it'll be a nice process to see. Pretty much the video. I'll definitely see you guys in the live stream.